Ah, the first taste of rare bourbon you finally got your hands on. That's nice. At Caskers.com, we make this experience easy. Caskers is a one-stop spirit curator with an impressive selection of exclusive, sought-after, rare, and household names in the realm of premium spirits and champagne. Discover the top flavors of the year now by going to Caskers.com and using code WELCOME10 for $10 off your first purchase. Get $10 off your first purchase with code WELCOME10 at Caskers.com.
Hello and welcome to The Price of Football with Kevin Day and Liverpool University's Kieran Maguire. Except today's a special episode because there's no Kevin Day. I think he's too busy sticking pins into a corn dolly of Roberto De Zerbi to make this particular episode. So it's just going to be me, but it's an interview with somebody who's got a fiendishly complex understanding of the world of football and tax. We talk a lot about various aspects of football clubs and their activities, but one that we don't tend to discuss is football clubs paying tax, and that's because actually historically most of them haven't done that. But things are starting to change. More and more clubs are becoming tax liable. It's not an area that myself or Kevin are experts in, but we know a man who is. So we had a little chat with Tony Bogod, and Tony, he's the independent member of the audit committee of Brentford Football Club, but he was formerly a partner in a large firm of accountants, and he became a bit of a tax guru during that time, and he deals with high net worth individuals, which people almost as rich as producer Guy. So this is our chat with Tony. Tony, thanks so much for coming on to the podcast. I'm sure
pleasure.
You're slightly baffled as to why some bloke from university and a comedian are doing a show on football finance. But you're a man
I'm very used to it.
You're a man that's far closer to the game than we are in many respects. Could you sort of give us an indication as how you came to be where you are today, and your sort of history involved in finance and tax and football?
Yeah, I mean, very briefly, I was at a firm called BDO for 25 years, where I was a partner with sort of cross responsibilities involving audit, tax, and so on. And then I worked for the last 20 years with high net worths on all sorts of aspects of their financial affairs. But overlaying all this, I had my main passion, which of course was what was then a small football team called Brentford Football Club. And I reached out to the chairman a few years ago and offered to help, because I knew I could help in various ways. And they asked me to be the independent member of the audit committee. So we have an audit committee consisting of what was at the time 2 directors and me. And that was my role. But through doing that, I got very involved in their tax affairs. And football tax is quite fascinating, actually. And I found a number of areas in which we could be more efficient in terms of how tax was handled. And I've been doing that with them for the last 5 years. And it's been great fun, but also quite revealing.
Wow. Okay. Because I did some numbers recently in terms of the profitability of football clubs in the Premier League, and Brentford have made more profit in their first 2 seasons in the Premier League than Manchester United have in 30. Do you think that's a reflection of how good Brentford are as a business, or is that perhaps more of a reflection of the wealth of the Premier League is not as great in terms of, we've got this glib saying in the world of finance, haven't we, that revenue is vanity and profit is sanity, and even the big clubs don't seem to be particularly interested in making profits.
It's astonishing, actually, isn't it? When I heard that podcast, and it's a great stat. But I think, as you said at the time, it's partly due to the interest payments that United have paid on the Glazer loans. But actually, I suspect that stat, if you extended it to other Premier League teams, you'd probably get something similar. For a team to make profit 2 years running is quite unusual. In fact, for a Premier League team to make profit is quite unusual. But Brentford is incredibly well run, and I think that's well recorded and accepted. And we've done very well with player transactions over the years, which has helped the profitability. And coming into the Premier League, clearly you have a first year which should be profitable because your player costs haven't moved up to full level. But in the second year, we also did it, and that's to do with, I think, good management, good player transactions. But what it means is that Brentford are one of the few teams who have paid tax on their profits, which is, of course, corporation tax. And other clubs often don't do that.
So if a football club loses money, is that money lost forever as far as the tax authorities are concerned? Or is the club allowed to do something? Let's say that West Ham will probably make a profit this season because they've sold Declan Rice, but they've lost profit, they've lost money in the last few years. So can they say, well, it seems a bit harsh. We've lost money 3 years out of the last 4. Why are we paying tax this year?
Well, it's a really good question, because actually this is one of the things that's changed over the last few years, and why tax in football clubs has become more important. So if a club makes a loss, it can carry that loss forever. So what that means when I say carry the loss, it means if it makes a profit in a year, it can use those losses to get rid of the profit in terms of whether it pays tax or not. So in simple terms, a club makes historic losses of, say, £3 million. It makes £5 million profit the next year. It only pays tax on £2 million. This is a very simplistic interpretation, but that's the broad structure. And those losses last forever, with certain restrictions, which I won't go into. They're too detailed. But what's changed is that you can only use those losses to get rid of a certain amount of profit now. So before, until I think it was about 2017, you could get rid of all your profits with your brought forward losses. And most clubs have got huge losses they haven't used. So almost any profit, they wouldn't pay any tax. But now there's a limit on how much you can use those losses to stop paying tax. And broadly what it means is that if you make more than £5 million as a football club, whatever your losses are in the past, you'll end up with a corporation tax bill. That's why it's become relevant, and more clubs will be paying tax and have been paying tax than they have in the past.
Okay. So therefore, from what you're saying, if they're not paying money on corporation tax, the football industry is still a contributor to the tax system, because there's VAT on ticket sales, there's money, players that must be paying a fortune, you've got national insurance contributions. So
massive contributors. Absolutely massive. I mean, it's interesting, isn't it? Because clubs pay PAYE, of course they do, on their players' earnings. And that's a huge amount of money, and national insurance. I mean, it's just a vast. But I can tell you, clubs will not like paying corporation tax on their profits, because they'll see that as being a direct cost for which they get no benefit. And they'll think, well, if we've made losses in the past, why should we? But unfortunately now they will have to if they make more than £5 million profit.
Right, okay. So if we, I talk to a lot of people in social media, I go onto podcasts and so on, and there's a constant theme that the money in football, directly related to footballers' wages, is a bad thing, but presumably they will be paying tax at the highest rate, which is 45%. You're paying national insurance on top of that. Is this why some footballers now have image rights companies, and they use those to try to sort of finesse their tax position?
So that's what I understand happens. It's not something I'm close to, but from what I understand, a number of footballers have arrangements where they are able to part of their salary into a company which holds their image rights. And I think there's a limit that HMRC have agreed. You might know more about this. I think it's 20%, Kieran, or something like that, which they can park into a company. So rather than being paid that as salary, say a player's paid, for easy maths, £10 million salary, they can choose to have £2 million of that paid into their image rights company. that does save tax. It saves tax ultimately because they can take the money out as dividend in due course, which is a significantly cheaper rate of tax. And it saves money in terms of time because they don't have to pay the tax until they take the money out. It's not quite as simple as that. There are other taxes involved. But broadly, in fact, it's interesting actually, I haven't seen this in action, but an image rights company also has to pay tax on its profits. So even though they can take the money out eventually at dividend rates, there is a corporation tax hit when the money comes into the company, if that makes sense. So I think probably the use of image rights is more about deferring tax than anything else. And it certainly saves the club money. It saves the club money because they don't have to pay national insurance on the money they pay into the image rights company.
Right. Okay, cool. Yeah, that all makes sense. Yeah. And certainly when I've spoken to one or two people at the Revenue, they say, Premier League footballer, yeah, they're pretty famous. We acknowledge that there's more to them than just kicking a ball about. If you are the third choice centre half at Sutton United or Barrow, the chances are we might take a slightly more raised eyebrow approach. So, my experience of talking to people at the Revenue is that they try to use the common sense rule. Is that your experience as well? If they're decent, if you're decent to them, then they're decent to you.
One thing I say about the Inland Revenue, they like to have clear rules on things rather than take subjective views on things. So I don't know what their rule is on when you can and can't use image rights. It's not an area I'm involved with. I don't know how Brentford do or don't use it because I've not been involved. My guess would be they have certain parameters that you and tests you have to meet to be able to use the image rights benefits.
Right. Okay. Cool. Thanks very much. We mentioned Declan Rice recently, and Brentford have been very successful in the transfer market, selling. And it's well known. I support Brighton, who've sold Cucurella, Caicedo, McAllister, Ben White. There's £250 million worth of not just sales, but nearly all of that is profit as well. What happens from a tax point of view when a player is sold, and do the clubs just have to suck it up, or is there anything that they can do to try to mitigate these costs as far as the club is concerned?
It's a good point because as you say, you've seen some huge transfers in the last couple of seasons, couple of closed seasons, and the ones you've mentioned are the biggest. And yes, clubs like Brighton will presumably have a profit as a result of those last two players they've sold. I think they'll be in the current year rather than the previous years. I think they were sold in July 2023. But yes, and West Ham similarly will presumably have a profit because they've sold Declan Rice. And on the face of it, as I say before, if the club's made more than £5 million profit, it has a tax bill, and the tax bill is at 25%, and it's not something clubs will like to pay. So the key about this, and the reason the work I do with Brentford really centres around this, is that actually, if you sell a player, and I don't want to get technical on this because it's quite a technical area, but basically, if you sell a player and you make a profit on selling that player, you can choose not to pay tax on that bit of the profit, and you can take it out of your calculation of what tax is due on. But you can only do that if you're going to reinvest the money from the sale in other players. And this is something that's technically called reinvestment relief, but we all call it rollover relief. That's what it's been known in tax circles for years. And basically what it means is you sell, let's imagine West Ham have sold Declan Rice. What was the price? 100 and...
I think it was 105 million. Yeah.
105 million, I think that's right, yeah. He should have come to Brentford, of course, but that's another point. But there you go. We missed our opportunity.
He missed his opportunity. I think you'd rather say.
That's good point. Good point. So 105 million for Declan Rice. And imagine West Ham have broken even in the year and they've made a profit on Declan Rice, which they probably have, of say 100 million. I don't know what they originally paid for him, but I imagine it was quite small. let's make them make 100 million profits. So they would have tax on the best part of 100 million to pay. But they can say, we don't want to pay that tax. We're going to reinvest the 105 million we got for Declan in other players. And if they do that, then they can avoid paying the tax on Declan Rice because they choose to invest it in another player. Now, there's lots of rules around this, but there's a 4-year window of players you can invest in. So as long as you buy players up to the year before you sell the player, and in the 3 years after you sell the player, you can invest the proceeds in those players and choose not to pay tax on the player you sold. Now, West Ham, have they had a big purchase in the current season? I'm trying to think, who have they bought? Who's a big purchase in the last season? Maybe there isn't.
They bought James Ward-Prowse, for example.
Oh, yes. Of course they did. From Southampton, yeah?
That's right.
So, right. So, James Ward-Prowse, this is a good example. Do you know how much he cost? Do you remember the numbers?
Around about 30 million.
I think it was 30. So they say, well, we're going to take 30 million of Declan's proceeds, and we're not going to pay tax on those. We're going to invest them in James Ward-Prowse instead. Now, what that does, okay, can I go back to one principle here, Kieran, just to explain this? It's quite an important principle. When you buy a player in a football club, you charge the cost of the player over the number of years of his contract for accounting purposes and for tax purposes. So say you buy a player who costs the club £10 million. Then he's on a 4-year contract, which certainly until recently was the norm. And every year, the club gets a deduction of £2.5 million for 4 years on their profits and for tax on that player. So that's how it's dealt with in normal circumstances. If West Ham buy James Ward-Prowse for 30 million on a 4-year contract, then normally they get £7.5 million allowed as a deduction against their tax each year for 4 years. Because they've chosen to roll the Declan Rice proceeds into it, he actually counts as costing nothing. So they don't get their £7.5 million deduction every year for tax.
Okay.
So although they save £30 million on the year they sold Declan, they save the tax on the £30 million, they end up having a potentially bigger tax bill for the next 4 years. So the whole point about this rollover is it's meant to be a deferral of when you pay the tax. You choose not to pay it on player A, but you then end up paying it over a number of years on players B, C, and D in the future. But what's really clever about this is you can choose which players to roll into. So we've used James Ward-Prowse as an example. It may not be in West Ham's interest to roll into him. It may be they buy someone in 18 months' time who's a better choice. And the reason I say that is because if you're clever about it, you can choose the acquisitions in such a way that the tax never actually comes back into play, because you choose years in which the football club makes losses.
Yeah.
So you choose years. So the years in which you have the add back for tax, in our case, £7.5 million each year for 4 years, you choose years in which the company is making a loss. And what you do by doing that is you never actually end up paying tax on Declan Rice. And it sounds complicated, but it's the way the rules work.
Yeah.
And when you're a club like Brentford, we had some tremendously successful sales. We had Ben Rama and Watkins in 1 year. We had Consta the year before that. I think it was the year before that. And there may or may not be an example coming in the closed season, depending on what you believe from what you read in the papers. So we also have bought an awful lot of players. Both the year before promotion and the first year of Premier League football, we bought a lot. And actually in the current season, we bought Kevin Schade and some significant players in the current season. So we've had a huge choice of who to select for these reliefs. And we've managed, therefore, to perfectly legitimately absorb most of the profits we had on people like Konsa and Watkins and Ben Rama and so on into other years when we've made losses. Now, we haven't been totally successful because Brentford has been profitable for 2 years, as you said, and you can't necessarily avoid tax completely on this, but we've certainly lost most of it.
So does that mean that if West Ham then sell James Ward-Prowse, there would be another tax liability, but provided they buy players, they can kick it down the road? And that's what you appear to be saying. If the club plans things, and for all of those people that go onto social media and phone up TalkSport and say, well, we've not spent the Declan Rice money. From a tax point of view, you should be spending the Declan Rice money at some point in that 4-year period.
I'm not quite sure.
So the angry taxi drivers have got a point.
I'm not sure it's the best strategy for a Premier League club to base their acquisitions on their tax strategy, but nothing would amaze me about the way businesses generally treat tax, which is far too much driven by tax. But yeah, I mean, of course, it's sensible to reinvest the money. If it works from a business point of view, the good news is it also works from a tax point of view, and that's the way around to think about it. What I should say is it doesn't vanish completely, the tax, because actually what happens is you have less losses in your loss pot. But given the sort of losses football clubs have, which they never use, it's all irrelevant. So you're effectively permanently getting rid of what's meant to be a tax deferral. This is not in any way tax planning that's anywhere near any knuckles. I mean, this is completely legit and supported by the revenue and by legislation. It's totally unambiguous that this is a principle that companies can follow. And what's even better about this is you have a whole 4 years to make your mind up on what players you choose to reinvest in for tax purposes. So if you're a club that sells a Declan Rice, if you're a West Ham, and then you've got, in the year before and the 3 years afterwards, you've got 20 different acquisitions, you can wait until you get towards the end of the 4th anniversary of the sale, slightly different date to that, but for very broad terms, before you decide which players you choose. So you can look back at your tax and accounts over the last 3 or 4 years and say, well, what's the best way to do this? How can we make sure we get rid of as much tax permanently as possible? And you can vary your choices retrospectively. And that's the way to do it, because you can save, as I say, we've perfectly legitimately removed very significant tax liabilities. We've affected our losses brought forward, so it might come back to hit us one day if we're super profitable for the next few years, which we might be. But on the whole, we feel we've made some significant savings by doing this.
And I think, because I've got no life, I've got every single set of accounts of every club in the Premier League since it started in 1992. And whilst there's too many clubs losing money, I think we are now moving into an era of more clubs being profitable. So I suspect they will be looking at things like this. I mean, clearly there will be critics, but I know enough about tax to know that this takes place in every industry. So, I don't think that football should be singled out in exactly the same way. I didn't feel that football players should be singled out during COVID for earning money when we're all doing so.
No, and actually, if you look at what's interesting, if you look at the 22 accounts, I'm a bit sad like you as well, Kieran. I also look at other football clubs' accounts, and nothing like in the detail you do, I hasten to add. I would give up a lot of my life if I had to do that, because that's quite time consuming, as we know, and as you know, it really is. But I think, in fact, I know there's about 5 clubs in 21-22 who made money, which is actually probably 3 or 4 more than there usually are. And I think in 22-23, when we see all the accounts filed, we'll probably find at least 5 or 6 clubs in a tax-paying position. The reason this is particularly important, and when I did this for Brentford, I thought, well, why don't their advisors do this? Because it's an obvious thing to do. So the advisors will say to the club, you can choose not to pay tax on Declan Rice. Yeah, you can choose to roll this over as long as you intend to buy new players. You can do that. What they won't do, particularly if they're the auditors because they have a conflict, what they won't do is say which players you should choose to roll into. And this is a really important distinction, because the work I've done on our position involved a massive spreadsheet and choices and logical thinking in terms of how to get the best outcome. I was changing it around several different ways, looking at past purchases, future purchases, where we're likely to pay tax, where we're not likely to pay tax. And so there's an endless number of combinations. And I was able to come up with a way of working out the best permutation for us. But there's no way. Well, listen, if your tax advisors are not your auditors, they will do that if you ask them to, but they will charge a fortune, because it's a huge number of hours of work. This is not quick work, and as I say, some won't, and if they did, it's not something they're used to doing, and they may not have the skills to do it. They should have, but they should be able to do it. It's not rocket science, but it's very time consuming.
And in general, would you say it's best to roll over these profits into good players, in the sense that they're young players who you can then sell on for a further profit, or older players where you're not likely to recover the transfer fee?
I think if you're a club that's continually selling and buying players, it doesn't make a lot of difference.
Okay.
So I don't think the decision is by reference to the type of player you're rolling into. It's in relation to when they are signed,
okay,
and which 4 or 5 years their contract will run for. So it might be best, for example, in year 0, in year 1 you sell a player. You can choose any acquisitions in year 0 or years 2, 3, or 4 to roll into. It's all about picking the right ones. And if you sell some of those before the end of their contract, so we had this with a couple of examples. I can't remember exactly who they were. David Raya, had we sold him this year, we would have had to think about the impact of that. As you know, he's on loan to Arsenal, highly in the news today, I'm delighted to say.
Certainly is.
So lovely to see him get some glory. But he's an example of someone we could have rolled into, and we may take a different view had we sold him this year in terms of whether he was the right player to roll into. So we can, again, because it's within the timescale, you can go back and re-examine it when something like that happens.
Right, brilliant. Yeah, makes a lot of sense. So you do have the benefit of hindsight when making these decisions.
Absolutely, you do. You have to decide. Just to be clear, you have to decide whether you're going to make the rollover claim.
Yep.
Within a year of filing your tax return. So you have to make the decision. Okay. But what you don't have to decide is which players you're going to choose for your acquisitions to roll into. Not for 4 years after you filed your tax return. I can't remember the exact date. It's something like that, or 4 years after the end of the year in which you sold the player. But it's a long time. It's 4 years. It's 4 years. The 4th anniversary of the end of the year in which you sold the player is your deadline.
Okay.
So if you sell a player in the year to June 2022, you've got till June 2026 to make your elections.
I'm sure there's many fans and coaches would like the benefit of hindsight when it comes to signing players in terms of what they deliver on the pitch. So the tax authorities are ahead of the game here. I was looking, because, as you say, I am sad. I was looking at the accounts of a club or two, and I saw that included as part of their overall revenues was something called research and development tax credits. I'm going, well, what do football clubs research or develop? How is this a thing as far as football is concerned? Have you any expertise on that?
I used to do R&D claims in my previous existence with a tech company that developed software. Okay. So this is the principle of R&D. The principle of research and development, R&D, credits is it encourages companies to develop new science and new scientific ways of developing better performance. It's a complex relief, but broadly what it does, if you spend £100 on something that counts as research and development, then instead of getting £100 allowed in your tax computation, you get, I think it's currently £230 allowed in your tax computation. So you get a very big extra deduction. So I don't know which clubs do this. It's not something I'm involved with at Brentford, so I'm not sure what our position is. But I do know it can be very worthwhile doing. Interestingly, the one thing about R&D is that if you make a loss as a company and you've spent money on qualifying R&D, you can actually get some money back from the inland revenue. They actually pay you some money. So you're able to turn some of your loss into actual cash. So if this was claimable by football clubs, then it's a very good thing to do. I have a guy have worked with for years at one of the big four firms who I've spoken to about this in general terms, and he tells me, because I know I've seen it in a couple of accounts as well, like you. He tells me that actually a lot of football clubs, particularly in the Championship and some in the Premier League, do claim this, and it's based around, I think, things like better treatments for players to avoid injuries and fitness techniques, but it's not an area I really know about or deal with. But if clubs could get that, that's very, very valuable for them, I would have thought.
Yes, because I see an awful lot of data analytics investments by clubs, the use of new algorithms, the use of new metrics to measure performance, and if that falls presumably within that umbrella of research and development, it's going to be claimable.
Do you know? I don't know the answer to that question. I mean, I think that the rules are. In fact, they've tightened the rules quite recently. I know from my past experience in not in football that this is an area. There's two things I say about this area. You've got to understand the rules of what qualifies, and you've got to have very strong documentation to support what you're claiming the money is spent on. So that's the first golden rules of claiming research and development. I'm talking about from my fintech company. I know this is true.
Yeah.
The other golden rule of R&D claims, which a lot of people won't thank me for saying, is don't deal with accountants whose sole purpose in life is doing R&D claims and who get paid by their success. And I say that because in my experience, the Inland Revenue much prefer dealing with the larger firms of accountants and are much more and will listen to them and trust them more than they will a firm that's just there to deal with this.
Yeah, I can see you could get you become the equivalent of an ambulance chaser for a law firm if you were just doing R&D.
No reason why you should. I think that's exactly it, Kieran. There's no reason why you should be seen as an ambulance chaser, because I'm sure there are some really good people in this industry.
Oh, I'm sure. Yeah.
But there's something about companies just charging, advisors charging their clients. And I saw this in the fintech business, charging their clients based on success that doesn't feel quite right on this. It either qualifies or it doesn't. And you should have the help on making sure you get what you're entitled to. As I say, whether it works for football clubs, we'll see.
Brilliant. Tony, this has been absolutely fascinating. I'm a nerd, and I've picked up so much from this conversation. We're listened to, from what we understand, by at least a few clubs. So I suspect you have a few people knocking at your door, because as football moves from being less of a loss-making industry, especially at the elite level, and I think we are seeing that shift. You've identified it, I've identified it as well. Clearly, tax planning. And for people who sort of sneer a bit at this, we all do. I've got an ISA. I do tax planning. I stick in my 50 quid a month or whatever it is. And I'm sure most people are being critical of football clubs because they are seen through a completely different lens to practically every other industry on the planet. So I'm sure they'll be fascinated by this as well. Thank you so much for giving up your time. And I'll be at the GTEC Stadium in a couple of weeks for Brentford and Brighton. We probably won't be talking for 90 minutes, but I'll give you a wave.
I'm not going to wish you luck for that, Kieran. That's for sure. I
suspect the two owners will be.
I think you must agree.
Similar.
I think we need the points. Yeah. I think we need the points slightly more than you do at the moment. Although I suppose you might be holding out hope of a European place, of course. But it's getting tougher, isn't it?
Well, we're recording this 24 hours before Brighton play Roma in the second leg of the Europa League. I'm still confident of a 4-0 victory, followed by a memorable set of penalties, and we go through and we qualify for the Champions League next season by winning the Europa League. Got to be positive as a fan.
All the more reason why you're always out at Brentford doesn't matter, Kieran. So just let us win. Yeah, that's all right. It's been a pleasure. Thank you for taking the time to talk to me. It's been great, and hope it was helpful.
Thank you. Absolutely brilliant.
Cheers.
The price of football. The price of football.
Picture this, the roar of a crowd, the tension building, the electrifying moment your team scores the winning goal. Pure joy, right? But for many football fans, barriers can shut them out of that experience. In the UK, nearly 1 in 4 people, that's 16 million, have a disability. And over 70% of those disabilities are non-visible.
There's a really broad range of non-visible disabilities out there. So it can be hearing loss, it can be sight loss, it can be neurodiversity, it can be any manner of things that people can't perceive.
People look, why are they parking in blue badge space? They can walk. Why are they using an accessible toilet? They're walking in. But that's not the point. You can't see the invisibleness of the disability. But then if somebody's judging you, you can tell they haven't got the awareness, they haven't got the understanding.
I've always lived my life as a sighted person who can't see, to the point where then if I didn't have my long cane chance, a lot of people wouldn't know. Me having it isn't always just for me, but it is actually for other people as well.
Find out how you can contribute to a more inclusive matchday experience for everyone by supporting Level Playing Field, the national charity advocating for greater access and inclusion for all disabled sports fans, through its Unite for Access campaign. Unite for your team, unite as a fan, let's unite for access.
The first taste of rare bourbon you finally got your hands on. That's nice. At Caskers.com, we make this experience easy. Caskers is a one-stop spirit curator with an impressive selection of exclusive, sought-after, rare, and household names in the realm of premium spirits and champagne. Discover the top flavors of the year now by going to Caskers.com and using code WELCOME10 for $10 off your first purchase. Get $10 off your first purchase with code WELCOME10 at Caskers.com.